Buying this can save your life. Now this asset went from 170 to 87 trillion per ounce. Now that's a very profitable trade. We are currently living in times where food shortage is on its rise. There's major conflicts going on in China, Russia, and now this can spark World War III.
World War III has never been closer than it is right now.
Now the biggest concern, banks are putting limits on your cash withdrawals. This has happened in Greece and now it's happening in Nigeria. You may have seen some of the instances on social media, but this can happen where you live. Now in such uncertain times, this asset can save your life and even your wealth. Russia, China, Turkey and other countries have actually been stacking up on this asset for over a decade now for their banking reserves. Now what makes this more appealing? Since last year, the buying pace has increased numerous times. Now this asset is actually in very high demand for institutions. Now this is due to the lack of backup that's actually kept in the banking reserves. Now talking about inflation, I have come up with two conclusions. The old one and the new one. Now they understand this asset has limited supply and global demand in the financial industry. Now when the inflation increases, the purchasing power of the currency will decrease. Now as a result, people will start taking out money from their savings and putting in safe havens such as this asset.
Those customers demanding their deposits back.
Now when I talk about people, I am not talking about me or you. Who I'm talking about is the larger institutes, governments and global investors. So basically they will pull out their money from FX deals, bonds, ETFs, equities and start investing it into this asset. Now that was the old reason. Now the new reason that I have, they keep printing out money, eventually the whole financial system can collapse, but the governments and the countries are actually aware of this.
By 4 p.m. the market had dropped 508 points, the biggest plummet since the crash of '29.
Holy fucking shit.
Now as a result, when they roll out the new digital financial system, this will be run on CBDCs. Now if it is run on CBDCs, this can mean that the new financial system will be backed up by these assets or similar ones. Now we have started to get an idea of this asset, this can actually be used as a safe form of currency. Not only that, this safe form of currency is actually very rare, it's desirable across the world, it has a lot of utility and it can be transacted anywhere around the world. Now as it can be transacted across the world, means it must be known. So you can literally trade it in for livestock, eggs, milk, tools, utility, you name it.
You can check this, you can check this. How much for this one? It's around 100 something.
Now you understand its power, you could easily say you could pass this currency down through generations and you don't have to worry about the depreciation factor. Now being physical and a form of currency, this can play a big part in uncertain times. Now in this day and age, 97% of the world's currency is all debt. Now as a result, this is just numbers on the screen. Now this is the reason why banks are facing massive liquidity crisis and this can cause a massive financial crash.
I don't think you seem to understand what your boy here has just said.
Now when the financial crash does happen, they will wipe off all the debt that they have, meaning all the 97% of debt that they have will be wiped off. Now this is the only reason why they want to push the new digital system. Now when the time comes near to push the new digital financial system, you start seeing a lot of wars breaking out, and this is what we see in Russia and China is all about money. Wars are made to profit from.
Conflict will definitely escalate into World War III. Under NATO's Article 5, an attack on one member is an attack on the entire bloc.
Now carrying these wars out, this will also allow the public to accept the new change into the new digital financial system.
The group of the world's 7 most advanced economies, the G7, is launching a set of public policy principles for retail central bank digital currencies, CBDCs. Central bank digital currencies could be a digital version of money, a bit like a digital banknote that could be used alongside physical notes and coins.
Now when the financial crash happens, this may be due to war. Now during the time when the debt is wiped out, there's a very good chance that your savings will be wiped out as well. Okay, if you have 85k, you are covered, but anything above that will get wiped. Or if they wipe everything, what this would mean for you is that the new system on CBDCs, you will be credited with that. So essentially, you have credit in your bank account. Now as a result, when the financial system is run on credit, there's a very good chance that they can control where you spend your money, how you spend your money, and how much you can spend. So this is why this asset known as gold is very important in times like these. So you have the safety and the freedom. But not only that, I will show you how it went to 87 trillion right now. Now here's a little story. Have you heard of the German mark, the hyperinflated currency? Before World War I, Germany had a gold-backed currency. Its economy was expanding and they were specializing in mechanics, optics, and etc. Now the German mark, the British shilling, Italian lira, and the French franc had a similar value, and this was around about 4 or 5 per dollar. Now when World War I broke out, Germany actually suspended its gold backing, so the gold standard was eradicated. Now as a result, if you try giving your German marks in for gold, they were not accepting it. Now to fund the war, Germany actually started to print a lot more money, causing a lot of inflation, and as a result, other countries like France did not do this. Now France, they imposed income tax to fund the war. Now as the war was going on, Germany kept on printing more money, and as a result they were thinking that they can actually pay it back when they win the war. Now as Germany was hoping to win the war, they actually lost the war. Now when they lost the war, their debt actually totaled up to 132 billion marks, and that's around about $32 billion. Now this is where it starts to get very interesting. The debt problem was actually caused due to not having enough economic resources to back up the printing. Now during 1921, the rate was 90 marks per USD. Now within the year, the German mark actually depreciated in value, giving you 330 marks for a dollar. Now due to the depreciation of the German mark, German banks actually started to buy FX currencies with the German marks. As a result, they were charging any price. So this can be 330 mark for USD, or let's say 700 marks for a pound. Now this actually sped up the collapse of the German mark, as a lot more marks were needed to buy foreign exchange currency. Now due to this failure, the US banker JP Morgan Jr. actually held a conference. Now in that conference, no solution was actually found. Now from that time, the German mark actually hit hyperinflation, resulting in roughly around about 7,400 mark per dollar, and this was in 1922. The cost of living index in June was at 41. Now by December, it went to 685. Now that's a 17x increase in cost in living. Now obviously Germany kept on printing money, and this led the economy to be hyperinflated at the point of no return. Now by November 1923, it cost 87 trillion to buy 1 ounce of gold, or let's say 1 ounce of gold was worth 87 trillion marks. Now this is the same thing we may start seeing happening to the dollar. Now World War III may cause hyperinflation, or hyperinflation may already exist for the dollar and the government is not telling us something. Now as a result, currently gold is valued at around about 1800 per ounce, and maybe in the future it may be worth 87 trillion per ounce, but we'll see.